Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. So we've got a couple of things going on after a big flush down in the markets, and we need to really kind of set the stage for where we're going next. So one of the things I want to cover off is that gold and oil are actually holding up here, and we need to pick one or the other, or maybe both, as potential investment sites. So I got a phone call from somebody, a friend of mine today, and he goes, "Would you buy Shopify today?" And it was like, it's one of the stocks beaten down the most, so it has an opportunity to bounce. But actually, one of the stronger ways to play the market after a pullback is to look at what people weren't selling. And it wasn't that easy this time, and I must admit I got shooken out of some of my positions. Things like Devon Energy pulled back 20% and have now rallied 20% in 2 days. So there's a quick twist going on here, and so rather than trying to buy the stocks beaten down the most, I probably want to buy the stocks that held up the most. And even while the NASDAQ was down another 2.5% on Tuesday, these oil stocks all traded well. So we want to look at that in a couple of different contexts. And so what I'd like to share this week is hopefully my market messages for the last month or so have been keeping you aware of the difficulty we have in the NASDAQ. I'm not sure that is over. I don't know that the selling will continue at the rate it's gone. I just think that it's not the area that you're going to get the lift. I don't think I'm going to get the lift. Maybe I should say it that way. And if I don't, then I can rotate into something else when it starts to show up. But my first objective is to figure out what's working. So, and if you like the kind of information I've provided over the last month or whatever, just to give you some clues about where the market was going with the Schnell Strength Index and some of the other charts that I shared, you can always try a membership at gregschnell.com. It's pretty reasonable. I think it's a little over $15 a week. And I think what you'll find from that is, it'll help keep you on the right side of the trades. And hopefully you're not sitting there holding a basket of a large number of stocks and getting, your market confidence crushed. Okay, so let's go over. So first of all, here's the NASDAQ the NASDAQ 100 for 2 days. It was down 2.5% today, and as you can see, that was like no big deal. It just looked like a normal day at the office. The problem is the scale was really, really wide swinging. And when we click in on that, what we see, one of the big things that we see is obviously everything is below its 2 moving averages now, and if we were going to start to ramp up here, after the Fed meeting, we'll probably get a shake as well. And then perhaps we'll have enough strength to start to buy this market. Our rate of change on the short-term period is actually starting to turn up, and we'd like to see it on I'll call it a little longer timeline. And then on our daily view, we've, again, 20% is huge for the top 100 companies on the NASDAQ. That's a pretty wide-ranging name grouping, and I think it was 18 or 19% from this peak all the way down to the lows. So we need more than 20% just to get back to where we were less than 2 months ago, and that's a pretty big swing. So I think it's crystal clear that in order for us to outperform this year, we're going to need to release the stocks that aren't working and try to stay with ones that are. And that's probably a bigger, more difficult thing for most people to process. It's been run to the NASDAQ and make your money there. Well, I don't doubt off a low, you'll make money. I think the more difficult part of that trade is the extreme valuation some of them are at in terms of price to sales. And I've covered that off multiple times. So I don't actually want to focus in that part of the market. So when we go over and we look at what stocks traded well, so even in a down tape, AT&T was up, Bank of America was up, BBD was up, and Petrobras, an oil company, was up. Now look at that chart. That's beautiful, breaking out to new highs while the market's down 2.5% on the NASDAQ and living down 20%. So this chart's just breaking out again over the price action of last week, and buyers were stepping in to push it up. There's a big volume bar on there on the bottom right, pushing that stock higher, so they continue to add to this, and that's the kind of thing we want to look for. If we go look at AMC, you know, I'll call it the meme stock of 2021, that thing is down in the bottom of the right hand corner, and it's just literally plummeting, and so it's going to be very, very difficult for that to get going. Names like Palantir have been well-regarded names. This thing's down 50% in a couple of months. So meaningful places if you wanted to deep dive some of those names. The real question is, are you better to buy these things way down, or are you better where people are hitting the gas pedal to buy the names on the way up? And I think that's the difference in the chart I just showed you between Petrobras and some of these other names. So today I want to cover off that information a little bit more clearly, and I don't want to just give you a bunch of oil names, but I want to give you some background as to why the oil names are so set up here. I last covered this in November, so it's been 3 months. Again, I'm not trying to sell you on the concept. I'm trying to give you an understanding of why the market is extremely bullish towards this section. A friend of mine from Quebec in Canada sent me a picture today, and it's their heating oil supplier, also saying that if you ordered any lubricants from them, you would have trouble getting those, and so they're actually starting to limit or cut back your order size to help share the volumes across all of their customer base. It's hard to run a vehicle without fuel, but it's even harder to run anything without lubricants. So I used to be a lube rep for Shell, everything from industrial mechanical systems in buildings all the way out to feller bunchers in the logging business and oil well drilling equipment, fracking, farming, you name it, lubricants are used across the suite. If they're going to start limiting lubricant use, you don't use machines without lubricants. You literally will wear everything out very, very quickly. The lubricant is a method of trying to control the wear factor. So that's just one example of how this is changing in front of us. So let me give you some other ideas. So here is the weekly natural gas storage for natural gas. And the chart for natural gas, it was up around $6 and it has pulled back. But you can see that in terms of this blue line, which is the current line, we're right around kind of the 5-year average. So the 5-year average is the gray zone, or the 5-year high and low is the gray zone, and the dark gray line is the average. Well, we're right on average, so you're kind of in the range. When we look at the pricing of natural gas, it's come off meaningfully, and I could just go here and show that to you. Again, because inventories are normal in North America, but not necessarily in the rest of the world. So here's natural gas. It was $6.46, it's $3.75, and that seems to have found support in here. So let's just call $3.75 the new support level. Maybe natural gas can rally from here as everybody tries to send natural gas to Europe to get them through the winter. It definitely should put a bid under the price, but because it's hard to get marine tankers that compress the natural gas into a liquid, haul it chilled to the other side of the world, and then re-warm it up slowly under controlled conditions to get it out and put it back in pipelines and use it. All of those things take time, and it's the amount of time that we have to worry about is we have to get through a couple of months, and I should have just turned on my do not disturb. There we go. So the point I want to make here is natural gas isn't what we're focused on. It's crude oil, and I want to show why. So here's crude oil, and this is the 5-year range for crude oil. And you can see the last couple of months here, we've actually had a period where we have less crude oil in inventory than we've had in 5 years. But more importantly is this big downtrend. We're not breaking that downtrend of oil in storage. And so we're actually getting to this situation where we're getting a little tight. And that lubricant example would be an example. If we start to break below this range in here, I think you're really going to see some supply shocks as we get there. Now, what happens is in the spring, January, they start to build stocks of gasoline. And this year is no different. But again, what's happened is the crude in inventory has stayed low while we've put more gasoline into storage. Now, here's the diesel fuel or heating oil. And what you can see is that same trend that we saw in gasoline is sitting here in distillate, what we call. So that's heating oil, jet fuel, fuel for trucks on the highway, diesel fuel, that kind of area of the market. Now, you see this big downsloping trend line. We're well under the 5-year averages here. So let's just say, okay, well, we want to get more distillate. So then we take more crude into the refinery. We crank up the volume, and instead of making gasoline, we can tweak it a little bit and we can make more diesel fuel. So let's say we do that. Well, we're going to suck down the level of crude oil again even more. So we're creating this situation where we're now starting to pick and choose which ones we can create with how much crude oil we have. And that's a meaningful step change for us. So as we go through that process, we have to be really, really careful. Now here's a chart I use for bullish percent for energy. And what happened was crude stayed nice and tight in a range, but the XLE and the XOP really started to crash down hard Thursday and Friday of last week. And again, let's say 112 to 95. It's a $17 move on roughly $100. That was a 15% wake up call in a week on these stocks. So that started to shake me out of my trades. But look what happened here. Oil service companies have already rebounded within 2 days, right back to the prior high, and that goes back all the way to July. And the XOP, oil exploration and production, this thing started to turn meaningfully higher. So all of these look set up to me. Now, when we get over to the oil versus the VIX, I like it to be above this blue line. Well, currently it's sitting on it. I just don't want it to see it drop below like it did here. And the other thing we've got is oil is outperforming the S&P 500, and typically that's a bullish time to be on board. Now, it doesn't have to stay ballistic like this, but what we wouldn't mind seeing is if it just started to track in line with the S&P 500, that would be okay. Anything like that could work. So all of those conditions are pretty helpful or supportive of the situation we're in. Now, if I took that same information about oil, the one thing, if I just showed you the gasoline prices for oil, heating oil and gasoline, what you see is heating oil is soaring up here, making new 6-year highs, and gasoline is breaking out this week as well. So it made a high, pulled back, and now it seems to be ready to move back onward and upward. So that looks okay. And again, crude oil itself is in a very bullish pattern. So let me just go get my crude oil. Okay, so this is just jogging sideways here for the last couple of weeks. Last week it made a higher high, but then couldn't hold it. So it's sitting right here. If we can see crude oil break out to higher highs here, I think this is a very robust picture. If it doesn't, then we have to alternate or alter our stance on this. But if crude oil can start to turn higher here and break above this $85 level meaningfully, you're going to pull up all of these energy stocks, and they're all coming out with earnings in the next couple of weeks that are going to be stellar. There's a good chance they'll surprise most people on the upside. This is the chart for the oil refiners, and what we see here is it's just jogging sideways. So we don't really want the gas station owners and that kind of stuff. It's not really doing a whole bunch for us. Now this chart is all set up to start to break out here in terms of momentum, and that's something I like to watch for. So if this started to turn up, that would be very bullish, but it could turn up for two reasons. It could turn up because they're what's called integrated, where they own both the oil and gas production area, getting it out of the ground, and they also own the refining element where they refine it and sell it at retail. So when you're integrated in the supply chain, it helps balance. So when crude oil is down, you might make a little bit more in refining, and when crude oil is up, you might lose a little bit or not make as much in refining. And so when those two things happen, it works as a ballast for the company, and it can kind of keep their cash flows more normalized. For a company that's, I'll say, just a marketer or a refiner, as their crude costs go up, you can see the pressure would be on them to have to get their selling price up very, very quickly to cover the increased costs they're facing. So as crude breaks out to new highs here, these companies are going to be trying to push up price. Now, typically they don't make as much when they're trying to push up the price. They kind of get squeezed as price continues to rise against them. And then when price actually starts to, I'll call it normalize or stabilize, that's when their margin can start to normalize or widen back out again. And when that happens, these might get a bigger run up at that point in time. But if you look at the SCTR ranking for the oil refiners, it's still up in the positive area. It's one of the top performing ETFs out there. But I think the big thing that I would just say is it really hasn't gone anywhere for a year. Until it breaks out, that's probably not something we need to focus on. When we go down into, I just want to grab my XOP here, the oil exploration and production ETF. Again, this big swing down was pretty hard, but we're trying to bounce off the 40-week moving average. And if we can bounce off here and head higher, that's a pretty important place on the charts. Again, getting back through this 110, 112 area, this could be meaningful. I didn't like this outside bar here. This was really ugly, especially as we try to break out to through a prior high. So I want to make sure that oil continues, or these oil names continue to shoot higher here and don't get us trapped in some sort of weakness. We do have a very strong scooter ranking here. We're pinned up right near the top, 98.5%. And so even the high momentum type investors that are always looking for new breakouts are starting to look in the oil and gas area. So add all that information I just gave you together. So again, the price of crude is trading higher. The oil exploration and production ETFs had a jagged bounce down, but are quickly rebounding, already up 6%, while the NASDAQ was down 2% today. So you're seeing outperformance. And then the third component is you're also seeing all different phases of the energy sector pick up. So you're seeing crude oil, you're seeing exploration and production, XLE, which is various forms of energy, not just oil. You're also seeing oil service companies break out to new highs. And the bullish percent index for oil companies is all starting to turn up. It's at a high level, but lots of companies are on a buy signal is what that means. And so when they're on a buy signal, just because a lot of them are on a buy signal doesn't make it a sell. I've heard some people talk about it like that. That's really not how that index is used. You can have companies on a buy signal like software. You could have them on a buy signal for a long period of time. But the point is, on these exploration and production companies, commodities swing a lot. The real point that's happening this week, literally this week, is that as the NASDAQ pulls down 20%, we're starting to see exploration and production outperform. So if we just go XOP compared to QQQ, whoops, probably need to get rid of all of that. XOP compared to QQQ, and I've shown this chart recently, it's starting to break out above the prior highs, which is pretty bullish. So I mentioned in this that if we could start to see this break through this level, this is a pretty important clue that something is changing in the oil business. So again, going back 2 years, every time oil producers got up against this level for that broad NASDAQ 100, oil companies would pull back. And so we got a big shake here last week, but we have turned and burned higher here, and it looks like we're breaking out. To me, that's a meaningful change in trend, and we want to watch that. Again, we got stuck here for 4 times, and all of a sudden we're breaking out to the top side. So that makes me quite bullish. And again, we'd like to see it finish the week there. One day doesn't make a trend, but we sure want to see if what they've got going there continues, then we definitely want to be on board. And why is that? Well, if you're a hedge fund manager and you have to outperform, you need to be in areas of the market that are moving up faster than the indexes. So how do you decide that? Well, one of the ways to do that is to make a ratio chart and say when this ratio is downtrending, you want to avoid it. When this ratio is uptrending, you want to get on board. Well, what we haven't had is an uptrend yet. We've basically been building a base after having meaningful downside for multiple years. And there are so many people that, well, oil hasn't done well for 10 years, so I don't want to be in oil. The whole point is that when that changes, then you do want to be in oil, or you want to be in what's working. And maybe you just, I'm a clean energy person, so I only want to be in clean energy that's working. Okay, well, you could do the same chart for that. But what you need to make sure is that you're buying something that is outperforming the index, and that attracts new investment by Fidelity and by, other managers that are getting paid to perform or outperform the S&P 500. So all of this adds together, especially with today's bullish push while NASDAQ was down hard. We're really looking like we're getting set up here for a big breakout in oil. And if these oil names are ready to surge higher, they're all about to start giving us earnings data over the next week or two. And so this could be a meaningful start to something good. So I'm pretty excited about it. Okay. So the last thing I want to show, if you just think about that NASDAQ chart that's dropping down 20%, look at what these charts are doing. So here's Devon Energy running up. This was $42 on Friday or on Monday morning or Monday midday, and $52 Tuesday afternoon. So literally in a day and a half, it moved 20%. That is a buyer stepping on the buy button and hitting it hard. Now, all of these charts have one thing in common. They're all uptrending. Here's Sandridge Energy, and this one's trending down a little bit. Now maybe it could be more natural gas related, got a little bit more overbought. But what we're looking for is something that's just starting to break out to new highs. So this NRT was horizontal resistance, broke out, pulled back on this recent noise from the pullback in the indexes, and then all of a sudden looks to break out. That's a pretty nice place to be on the chart. Comstock, this chart isn't performing quite as well, but here's another one. Broke out above $70, ran up, pulled back down, and it looks like it could be ready to go higher. Vista Oil and Gas trying to do the same thing. So it's making a cup and hopefully a bounce out of here. That's what we're looking for. When we look for stocks in the market, again, you're trying to find something, not necessarily. Some people are looking for something cheaper, Shopify down 30% or whatever, and they want to go buy that. Go ahead. The idea here is that all of these stocks are making new highs as a group. And the reason that they're breaking out to new highs is there's something very positive in their overall industry. And so it's that marriage of the industry doing really well, and all of a sudden as a group, they start to thrust higher. And the second component of it is individual names have, either hedged their production, which means tried to guarantee a price for the future so when they sell it, they could make money. Well, if they're unhedged right now, as price moves higher, they're getting all of that, which makes it much more profitable for them to be in the trade. So this Synovus breakout looks really good as an example. I could go on and on and on, but these charts look well set up for us to start to make some real money on. And as they start to turn higher, I think that's a pretty important place. Now, I also mentioned gold at the beginning on the PowerPoint. And my point here is that there's a lot of gold charts setting up at the same time and doing the same thing. So I don't want to just push you one way or the other. Hopefully the purpose of today was not to give you a name to trade. It was, why are the oil stocks all starting to trend higher and break out? And hopefully I've been able to share that with you. So thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. You can also see the recordings on StockCharts TV YouTube page. And with that, I'd like to say thank you. If you have any interest at all in joining GregSchnell.com, I'd invite you to head over there. There's lots of things we try to do on the site. My strength indexes, as they pull back, they'll eventually start to turn higher and give us nice entries on stocks. So hopefully there's some knowledge for you there. Thanks, everybody. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.